Hello, hello everyone, and welcome to ICM's midday session. In terms of economic data, it was a bit shy in the morning. We didn't have much of economic indicators coming out in the European session. However, ahead of the US session and during the US session, we have a series of economic indicators coming out, especially that the US will be off on Thursday and Friday due to Thanksgiving. So most of the indicators that should be released on Thursday and Friday, they will be released today. So this is just can create more market volatility, especially as investors. They're just waiting for more information to look into the latest economic activity in the United States and the impact of the recent wave of COVID-19 on the economic activity. So definitely this is just something that you have to watch out for. We have the series of indicators, among them the second reading of the third quarter GDP, which could be a good mover, initial jobless claims, also home sales and durable goods. So these could be movers. And then later at night we have the Federal Open Market Committee meeting minutes. So also this could impact the market. Now let's focus on the charting. We're seeing the dollar regaining some strength, especially following the European Commission President von der Leyen. She was just mentioning that she doesn't know whether there could be a Brexit deal in the end of these talks. So this was just a bit pessimistic on the market, and we're seeing the euro and the British pound weakening again. So let's start with the euro dollar, which was able to break above its recent range, so rising to almost the same area that we highlighted previously, near 1920, and finding resistance there. So this is just on the smaller time frame. So if we just go for the hourly chart, you can see this series of moves to the upside. We had a move higher, and then correction and move higher, and now we're in another correction. So what you can do is just highlight the recent bottoms. You can draw these the trend line combining the recent bottoms, and watch out for any break below the trend line, because it could lead to a bigger correction towards the previous support area between almost 118 and 118.20. So this could be the coming support area of the market. Continues lower. However, on the upside, a reversal and the trading back above 1910 could lead to further chances of trading near 1950. But this definitely also could be happening along with economic indicators from the United States coming out. So this is just the formation. What we could be looking for at the euro dollar. Just draw the bottom. You can see how the market exactly rallied to the channel. So if we remove everything and we just focus on the channel, we can just know that the market is trading in this channel again, and just draws exact 1, 2, 3, and exactly the fourth point was at the top of the channel, which was almost coinciding with the previous top, and this led to a reversal. Now we're trading back lower. Moving to the British pound against the United States dollar. As I said, following the announcement, we had a bit of pressure. So you can just highlight this trend line, which we're almost trading below it. When we go back above it, it's a bit more bullish on the pair again. And just highlight the previous resistance coming near almost 133.90, 134. So this is just an area where we were able to trade slightly higher. You can just go for another trend line here and watch out for any continuation down to 32.70, 32.77. We highlighted this trend line yesterday, and we stated that it coincides with the previous low. So watch out for any support if we drop towards 32.60, 32.70 area. The dollar against the Japanese yen, we're consolidating inside a certain range. So following this sharp move here, now we're trading inside the range again. So you can just highlight the top and the bottom of the range and trade its breakout. And a breakout from the downside could lead to a retest to 103.65, 103.27, the previous lows, while a continuation to the upside could just take us higher towards previous stop of 105.66. So you can see how also these levels, they're just coinciding. Previously, when the market rose following Pfizer's headline and we had a bit of a retracement, it was exactly to this place here, to this price range between almost 104.70 and 104.80. The dollar against the Swiss franc, still on the bigger picture, we're just trading inside this range. So by just drawing this and definitely the trend line that we drew yesterday between the tops, you can see how the market rose exactly towards 91.45 40 almost. Yesterday we were hinting that the top of the trend line could be near 91.40, 91.50. So this is just what we rallied to the top of this trend line. So now we're trading inside this wedge. So watch out for any breakout of this wedge. A break to the upside could just lead to another retest towards 91.90. While a drop from here back, the first support comes in at 90.70, 90.80 area. So this range here between 90.90 and 90.75. The Australian dollar against the United States dollar, following this breakout of the range, still it wasn't sufficient, and we went back lower inside the range, and now we're trading in another consolidation zone. So we had the bigger consolidation area trading in for almost 2 weeks, and now we're in a smaller one. So you can just highlight the recent tops and bottoms and trade the breakout out of this range. But definitely 73.40, which we're currently trading at 72.30, is key area for where any drop, serious or significant drop back below it, could lead to a retest to this trend line, combining the previous bottoms near almost 72.80. Also, if we just draw what we drew on the euro dollar, you can see that the market exactly found resistance near the top that we also mentioned during yesterday's session. So you can see that the market clearly, it's very simple, by using classical technical, by just having a bit of assumption where the market could be going, drawing some probabilities, some chances, you can just have certain signals on the day. So 73.70 remains a key level ahead of 74.15 resistance area, while a drop here below 73.30 again could lead to a retest to the downside of the channel near 72.85. The New Zealand dollar against the United States dollar, it's a bit cautious today, trading inside a smaller range. So definitely this 70 area is a key resistance area. It's a round number, a big number. So any clearance back above it could lead to a retest of or a rise towards a rally towards 70.50 area, while a drop and disappointment here and a failure could just lead to another retest to the downtrend line that you can draw. First, we have a couple of trend lines that you can draw here. First, this one, that's clear how it's joining the previous bottom. So you can expect some support near 69.10 if this drawback continues. And another one is just on the bigger picture, where you can just look for the previous the current support, which was the previous resistance near almost 67.80, 68 zone. The dollar against the Canadian dollar, despite oil prices strengthening and rising towards their highest level since almost March 2020, but still on the Canadian dollar, we're not witnessing any sharp movements. We're just trading sideways down. It's very clear that we're trading sideways down. You can just highlight this, that we're also trading inside this channel. It's a downward channel, 1, 2, 3, and we got our fourth point exactly on point at 129.90, which was almost equal to the previous support zone. And then we rallied back towards 30.20. This is almost 30 pips by just drawing this channel and putting some probability that the price could have a rebound here. We had a reversal formation, and then the market moved higher. So this is for the Canadian dollar. Just you can trade this channel, any movements in this channel. Gold prices, if we just go back to the recent tops and the bottoms, so you can see also 1, 2, 3, 4, and now we're almost at the fifth. So exactly the market found support yesterday at the bottom of this channel, and we were able to rebound slightly towards 18.14 today, 18.15 even, but now we're under pressure again. If we just go closer to the chart to check what we can grasp, you can just highlight some key levels, 18.21 and 18.30, where we had 18.35, 18.40, where we had our first rejection. So these could be some resistance levels, or some selling pressure, some selling orders could be building there. So watch out for any movement back higher, since some traders would be looking to sell the rally if we just expect further drop in gold prices. And if we just want to highlight if we expect the market to move lower below this channel, we can just highlight this area that we talked about between 1790 and 1820, which was a key consolidation area ahead of the rally that took place in July and drove gold earlier in August towards 2072. So these are the key levels if you are trading gold. Moving to silver, it's just a bit solid, more than gold, since also a better economic activity could just add the demand for the industrial metals. So we're just finding some support at this area here. So you can just draw it near the previous bottoms. You can just highlight support near 2260, 2160, 2150 as key supports. While any move higher or reversal or success on breaking above the trend line could just add some positivity on the outlook, and maybe we can see silver bouncing back higher towards almost $24 per ounce. The Dow Jones, following yesterday's rally, where we had a sharp rally towards almost 30,230 on the Dow 30, and then where we had this reversal candle, and now we're moving back lower. So if you just highlight what's happening here, you can just draw possible support at the previous resistances that were taking place near almost 29,900, where we also dipped here and then moved back higher, while any break back above the previous top near almost 30,060, 30,100 could just lead to another rally higher, and we could be rising towards new highs. This is just an interim support here near 29,900, while a bigger support could be expected definitely. Like on the bigger picture, the key support for this area should be built near almost 29,500, since we can see how many times we faced reversals from this area here. So this is just the key level to highlight on the bigger picture, since we know that the Dow Jones is just so volatile recently, and the 400 points could be just seen within one straight session. So this is for the Dow Jones. The WTI is just continuing its uptrend. So as long as we're above the previous resistance, 43.30, 44 level, 43.85, we're just still bullish, and expect further rally on oil. We recently highlighted these previous support zones that could be coming as resistance in the coming weeks. So this is just the range that we could be trading at for oil in the coming session, especially as OPEC Plus meeting that's happening late this month and early December would be also adding some like volatility on the market. So this is just what we can look out for. We're just having a series of higher highs and higher lows, a complete straight uptrend. You can just draw a parabolic curve, where you can do it also on the MetaTrader 4 platform. You can just go for drawing these trend lines here and just combining the bottoms in order to have similar to a rounded trend line. And when the market breaks below this rounded trend line, then you have to be cautious, since usually when we have a parabolic curve, then the market retraces in the same way. So this is just for oil, and this is all for today's session. As I mentioned, you better watch out for the economic indicators coming out from the United States, since they could add some volatility to the market. This is all for now. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this live session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for today, and wish you safe trading.